Divorce doesn't just reshape your relationships, it can dramatically transform your financial life, especially when it comes to taxes. Understanding how divorce affects filing status, exemptions, alimony, and asset division can help you avoid costly surprises and plan more effectively. First, your filing status depends on your marital situation on December 31st. If your divorce is finalized by year end, you will file as single or, if eligible, head of household. If you're still legally married, you may file jointly or separately. Your filing category influences your deduction amounts and your tax brackets and credit eligibility. Next, only one parent can claim a child as a dependent, which impacts the child tax credit, earned income credit, child care credits, and head of household status. Typically, the custodial parent claims the child, unless both parties agree otherwise, using IRS Form 8332. Alimony rules also shifted under the Tax Cuts and Jobs Act. For divorces finalized before 2019, alimony was deductible for the payer and taxable to the recipient. For post-2019 divorces, it's no longer deductible, and the recipient no longer reports it. Child support, however, is never deductible or taxable. When it comes to property division, most transfers between spouses during divorce aren't taxable. The receiving spouse inherits the original cost basis, which can lead to capital gains taxes later when assets are sold. And when selling a home, only the spouse who lives in the residence and meets IRS requirements can claim the individual exclusion. Dividing retirement accounts requires special handling. 401ks and similar plans need a qualified domestic relations order to avoid penalties. IRAs don't use a QDRO, but transfers must be written into the divorce decree. Finally, most legal fees are not deductible, though tax planning advice from financial professionals may be. Understanding these tax factors helps you make informed decisions during and after divorce. Working with a knowledgeable tax advisor or divorce financial planner can support long-term financial stability. Divorce can dramatically change your financial and tax situation. In this video, we break down the key tax considerations during and after divorce, including filing status, dependent rules, alimony, property transfers, retirement accounts, and professional fees. Whether you are in the middle of a divorce or adjusting afterward, understanding how the IRS treats each part of the process can help you avoid unexpected tax bills and make smarter financial decisions. What you'll learn in this video: how divorce affects your filing status, who can claim dependents and child-related tax benefits, how alimony is taxed before versus after 2019, tax rules for property division and cost basis, how QDROs work for splitting retirement accounts, which fees may be deductible, and finally, why tax planning matters during the divorce process. If you found this helpful, please like, subscribe, and share.